My name is John Fry. I'm the owner of Fry Insurance Agency, Duncanville, Texas. We provide insurance for home, auto, life insurance, anything you might need as a homeowner. Homeowner's insurance is mandatory when you have a mortgage. Mortgage holders require you to have homeowner's insurance. If you own your home, you're protecting yourself. You're protecting the investment that you have in your home. Homeowner's insurance protects against all forms of damage with the exclusion of earth movement. Things such as windstorm, hail, hurricane, tornado, fire, lightning, theft, and the standard homeowner policy does not cover flood, and the definition of flood is rising water. Most policies cover accidental discharge, but they do not cover rising water. Some companies actually base premium on credit score, some do not. Protection class code is definitely part of the rating process. Lower the community score, the lower the insurance premium. Usually it's 3 strikes and you're out. Normally on the second claim you'll get a written notice for the company saying that your policy is in jeopardy. If you have another claim, you could be non-renewed or rated, and in most cases, rather than being rated, they will terminate the policy. MetLife, Auto Home, Safeco Insurance, Progressive is probably my number 2 carrier. Travelers Insurance, Republic Group, all of those companies are A-rated and above, and are larger companies. I do have a number of smaller, even non-rated companies that actually are excellent carriers. Basically, renter's insurance is packaged like a homeowner's policy, with the exception of we're not insuring the dwelling, we're insuring contents only, and it gives the water damage coverage as far as accidental discharge, it gives backup of sewer, it gives everything basically that the homeowners gives as far as coverage for your personal property. Mandated by the state of Texas is 25, 50, 25. The first 25 is bodily injury per person. The 50 is bodily injury per accident, and the last is property damage. That is current state mandated minimum coverage. We go from there to carrying uninsured motorist, personal injury, comprehensive coverage, collision coverage, rental reimbursement. The part is mandatory is the third-party liability, which is the 25, 50, 25 coverage. Coverage on the automobile policy is dependent upon the policy. They're limited liability policies. Those are the policies that are sold by the people that specialize in high-risk liability only. And the limited liability policy only covers the person on the declaration page or the policy. I mean, if that name's not on the policy, there's no coverage. The standard liability contract will allow a person to loan their car, and yes, they would cover it. But that's some of the pitfalls of buying cheap insurance is you have to know for certain what the coverages are. I personally don't advocate the limited liability contracts, but if all you want is to fulfill state requirement, it will fulfill the state requirement, but you have to go by the letter of the policy. The limited liability contracts will not cover anyone other than the persons on the policy. If you listen to the news, a number of people that get shot at convenience stores, children get killed in automobile accidents. I've never been an advocate of large policies. The life insurance contract is guaranteed to be paid if premium is paid, because we're all going to die, and there will be end expenses in the current economic conditions. If you take one income earner out of the household, how are you going to get by? And it's for end expenses and income replacement is the reasons for them. How much coverage do you need? At least 5 times your annual income. The rule of thumb, most people will protect their mortgage and just take out the amount of the mortgage. If you got a $100,000 mortgage, $100,000 life insurance, so if something happened, as I said, and take away one wage earner, then the surviving spouse would be able to continue living in the house that they were accustomed to. Term is for a term. And usually it's 10, 15, 20, 30 years. And at the end of the term, it's gone. The term expires, and if you don't expire before the term, your money's wasted. For whole life insurance, and there are varieties of whole life, some whole life will accumulate a cash value, where at your death you get the face value of the policy plus the cash that's accumulated. There are also whole life policies that do not accumulate cash value. And what that does is just basically guarantee your premium to be the same from start to finish. With term insurance, there are multiple types of term. One is annual renewable, one being level. Most people purchase the level term, and the term carriers will give a guaranteed acceptance at the end of the term, but the only thing about that is you have to pay a premium based upon your age at the end of the term. So if you take out a 20-year term and you live through your 20-year term and want to renew it at the end of 20 years, you have to pay premium based upon your age at that renewal at the end of 20 years. Where if you have a whole life for your whole life, in the later years, premium will be less than it would have been if you were paying term insurance. If you did a renewal, I like to sell a combination of, because we're all going to die. So you need insurance if you live to be 100, because there are going to be end expenses, funeral expenses, medical expenses that need to be paid at the end of your life, and you can buy cheap term in combination with a low amount of whole life insurance, where if you live through the term, you'll still have low rate on your whole life insurance, and then as long as you pay premium, they will pay a claim. We're customer focused. We attempt to customize insurance programs for the person, not cookie cutter, because all risks are not the same. We do have some incentives. We try to give back to the customers and to the community.